growth requires more than capital.
Why do we call it the cheat code? Nobody said growth had to be fair.
Revenue solves everything.
Welcome to the cheat code. What was our fastest path to revenue?
We tend to like to do things the hard way.
What's the cheat code? It's giving yourself an unfair advantage over the others.
What is it that really works, and how are we going to grow these organizations?
That's our cheat code. Hello, everyone. Welcome to another episode of the Go-to-Market Cheat Code. I am Josh Wagner alongside Justin Gray. Justin, how's it going today?
We're back, baby.
We're back. We're doing it again. Well, welcome to another episode of season 3 now of the Cheat Code. We are focused on go-to-market cheats and specifically in the marketing realm. So we have an amazing guest today who's joining us. She is currently the CMO of Demandbase, honed her startup skills as the first CMO at Haiku, a Series B venture-backed data protection SaaS company. That's a mouthful. She worked for all stages of companies, from startups to growth stage, to GVP and Chief Marketing Officer at Gartner Digital Markets. And now we would like to welcome Kelly Hopping to the show. Kelly, thanks for joining us.
Of course. Thanks for having me. I'm glad to be here.
Yeah, it's great to have you. So as we often do, we just jump right into your cheat code. And as we talked about, it seems like the perfect person to give us a marketing cheat. So let's have it.
Sure. So my marketing cheat code that I think applies throughout my life is to always be a business athlete first before you're a marketer. And I can tell you whatever else
you're going to have to dive into that one. I love it. Well, let's go.
Yeah. So, I give this feedback a lot, and especially this advice to new up and coming marketers, but it's the way that I've always operated. I think marketers run the risk of being not taken seriously, or maybe even kind of seen as like fluffy overhead or a cost center or
the arts and crafts department.
The arts and crafts department, right? It's where creatives go. It's how creatives work in corporate. It's whatever the things are. When the reality is most of marketing today, especially with digital marketing and everything else, is much more science than art. But because of that, there's room to really be a business person first. And so, because there's plenty of marketing out there that's just random acts of marketing that has no objective, no sort of measurable impact, none of those things. And so I just think in order for marketing to gain the respect of its peers, to make sure that sales recognizes the value that marketing is providing, to be able to justify existence, prove worth of the role, justify headcount expansion, whatever it is, you always have to put yourself in the position of a business person, or how is the CFO looking at you? And so what that means know like what the P&L says. It tells you like where the puck is going and where you need to skate to. If you want to know where the company's growing, it shows where company's putting investment. It shows which organization is growing. It shows what business unit we're focused on. It shows areas we're cutting. It shows areas that are declining. It shows where customers are churning. It shows all these things show up in a P&L or a balance sheet. And if you can look at that and understand that, then you can put yourself in a strategic line of, this is the area I want to focus on. This is the programs I'm going to focus on. This is the area of the business where we're going to get investment. So I'm going to kind of raise my hand to play in that role. So it allows you to kind of make good decisions. I think the other thing it does is, and if you listen to an investor call, you can also figure that out. You can tell it just in the exec summary exactly where the business is focused and put yourself there. It's good for job security too. But I think also when you go into like a campaign, right? Marketers run campaigns all the time. And so the question is always, I think marketers hear like, oh, you want me to run this campaign? Great, I'll go execute. And they don't stop and say, well, wait, like, what's the objective of this program? Who's the target market? What are we expecting them to do with this campaign? What's the action we want them to take? What's the impact it's going to make on the business? What's the ROI on this program? Is it going to pay off? Like, what does success look like? How will it benefit the business? Like, if you kind of come at it from those questions, which are essentially grounded in the financials, then you're going to make better decisions, because you can realize you can filter out crap programs pretty quick if you realize that there's not really an end state. So that's my biggest cheat code is if you do that homework and that sort of legwork up front, then I think it means that you're executing the right programs and focusing in the right area.
I love that the word or the phrase random acts marketing was used because
I was gonna say the same thing.
CSO, shout out to JT Bricker,
Yeah.
who is probably celebrating somewhere because he would say that literally every day. So, which begs, I think, the most important question here, Kelly, which is where do most marketers gain that context? Because I think that the challenge is, and as you mentioned, there's so much marketing that is, inherited this kind of arts and crafts and being this blip on the budget that's almost kind of like spend when times are good and when times aren't as fruitful, that spend kind of gets pulled back and you kind of get put into a corner. It's difficult for people to get that context. Where do you find that folks can go to truly dive into a P&L and start to understand things more from a boardroom standpoint rather than arts and crafts room standpoint?
Yeah, I mean, it's a great question. I mean, certainly there are, there's a few ways to do it. One, there's kind of all kinds of finance for marketers type, finance for marketing dummies type classes or whatever, or blogs and things you can read. But I think on a reality basis, you can spend, we all have a finance business partner in the organization. So you can talk to them. My FP&A partner helps me understand, I'll sit down and say, hey, I think I want to hire this head. I'm not quite sure. How does that impact the P&L? What's that going to do for my budget? And so then they can kind of coach me through. And I'm like, what does that put me on my ratio of headcount to working dollars to non-working? Am I mixed right? So when I ask just a lot of questions and you sort of unpack a little bit of how that fits in the macro org. So that's one, is just to ask a lot of questions. Two is to listen to investor calls. Every public company's investor calls are public. You can go out to Yahoo Finance and you can find anything you want, listening to those, because they go through the P&L. They go through the explanation of, and sometimes it's boring. My advice on that is if you listen to the beginning, what happens is the CFO reads out a whole bunch of speeds and feeds of lame balance sheet metrics.
Yep.
But then there's a conversation that happens afterwards. And then it kind of explains, it does a double click into each of those and said, hey, based on this, you can see that our retention is down in this business unit. We're investing in fixing that product, but it's probably going to be a couple years before we get there. Then you're like, okay, well, maybe if I'm on the product team, that might be fine. If I'm in sales, that might not be an area I want to focus. So I think listening to some of those, you start to get those dynamics. For your career, I think for business, you start to listen as to what does an increase in cash flow mean? Does that, and how does that affect profitability and all the things that kind of affect where you're at. From a marketing perspective, the Rev Ops team is a great place to go. So that's usually some combination of marketing ops, sales ops. They can look at your attribution almost always to understand how what you work on drives this many leads, this many conversions, this much pipeline, this many closed won, this many bookings. You can figure out the ROI on a campaign. So you can go, in good companies with good data, right? You should have taken that for granted there, which is not always the case. But if you could look back and say, okay, it looks like most events generate this much of a return. I should think about this. This seems higher or lower than past event prices. It looks like this is the type of return we're going to get. I may go ask the sellers. Looks like we did really big with enterprise on this. I'm going to go talk to my enterprise sales team and say, hey, we invested in this event last year. It looks like it drove this much pipe. Are you hearing, is there still stuff in flight? Are there things that are going? Is it a good investment again for this year? All these things start to prove, the one they teach you, because you ask, and you can ask marketers, you can ask any dumb question, right? If you're asking about the financials and the return, you've already impressed them, right? No matter how.
Yeah, right.
It's so I think those are some ways I would do it.
Yeah.
I think that's such a key there is asking questions. So many people are afraid to sound dumb, which to your point, simply asking the question is already putting you light years ahead of most folks in those roles.
Yeah. Yeah, absolutely.
Yeah. I love the investor call one. I remember specifically going back to our last company, a friend, a colleague at the time had asked me, how do you understand all the business side of what we're doing? And we were a marketing company. Yeah. And I said, well, how did you learn it? And I said, well, I didn't get a job out of college. I started a company. So I kind of was trial by fire. Yeah. But I said, all of our customers are relatively big companies. And like you said, most of them have publicly available information. So, download the 10K, listen to the investor calls, and you'll start to see themes and things like that. And to her credit, she's an absolute sponge. And then all of a sudden, I would get pings from her, within a month. Hey, have you read the charter from the CEO of our client who said this, this, and this? We should dig into that. I'm like, yeah, we absolutely should. It just became this like all of a sudden curiosity that just propelled her. And, now she's doing amazing things. But just to Justin's point, that curiosity was absolutely incredible.
Well, you set yourself up to have immediate value add to your boss. Like I've learned that when the different stages of my career have been kind of big accelerators. And I remember when I was at Rackspace and like hearing what they were talking about on the investor calls, going to my boss and saying like, hey, I saw that the investment that we're doing is really going to be in managed services on public cloud. I feel like there's an opportunity to really highlight that in our marketing. And she's like, yes, please go do that. And like, he's indispensable because she was like, oh, you're actually paying attention to the business. You're not like heads down in your little marketing world. Amazing. And all of a sudden, like it stretched and stretched. I went from like director to VP, or when I would go from director to senior director and VP over 3 years, just because I was just curious and like digging in and showing and saying, hey, I want to do that. I want to play with this. I think there's opportunity here. Let's go into verticals. Let's go into solutions, like things that I saw because I would hear, or even little things like I would read like the Gartner Magic Quadrant, and I would look for where we were getting dinged. And I would say, oh, these are the things that the analysts, which are representative of some part of the market, you look at it and say, oh man, look at analysts are dinging us because we don't have a vertical strategy. Like, hey, I'm going to sign up to put together a vertical strategy for us because I think there's an opportunity here and we can transform our position in the MQ next year. Like, read, curious, ask questions, like sign up for those gaps.
Yeah, I think it's super cool. And curious, if you're able to identify those things, that's one thing, right? And the next step that I found, and you mentioned RevOps and whatnot. So I'm curious to get your take on how do you take the marketing activities, you've mentioned the campaigns or whatever it is you do, and then translate that back into the P&L speak that you went and uncovered? Because I found that translation layer is very difficult for marketers.
Yeah. I mean, obviously it depends a lot. It's a battle we have every day, right? And so even knowing what you're supposed to be looking for and trying to back that out from the data, and especially if you don't know what you're looking for because you're a young marketer or maybe you're in your role, I think it's really, really difficult. But so like for me, for example, like what we're trying to look at is like when I first got here, it was like, okay, I need to understand overall marketing effectiveness. How much are we spending? Yeah. How much are we generating? How much is converting? How much are we closing? And then looking at that and saying, where's the leakage? Like if we're missing, like where are we leaking? Are we leaking at conversion to pipe? Are we leaking at pipe to close one? Are we leaking at lead to op? Like where is the fallout happening? And it's just kind of thinking about I think there's a really common sense side of marketing from that regard, right? You're like, I ran a program. There were 100 people who came to my event. I'm going to watch those 100 people. We're going to follow up with an email. Let's see how many click through on that email. I'm going to send them another email. Let's see what they do. I'm going to invite them to a webinar. Let's see if they come. I'm going to invite them to set up a meeting with an SDR. Let's see if they do it. And you can literally like watch people and you like learn a lot through this. That all of a sudden you're like, okay, I had 100 people that came to my event and we just closed 3 of them. Okay, my event cost me $100. We closed for $100,000. It's pretty good ROI.
That feels good.
Yeah, you can feel that, right? And you can do that obviously in RevOps at more of a cohort level instead of trying to watch individual humans and that kind of thing. And you realize it's not linear, like it's a freaking death spiral within the marketing world. It's just a chaotic kind of cyclone. But eventually, like something falls out of the bottom that you drop in the top, right? And so it's just a matter of if you can figure out what those are, figure out where the leak is, and then understand how to fix that, then you can start to run more intentional programs. So I think, RevOps is, we always try to roll up and make it simple. Like, hey, I just want to know what the marketing influence was, or just what the marketing sourced contribution was to revenue or whatever. We want shorthand. But the reality is like, that's going to help you in like the big way. It's going to help you say like, hey, like we know what the ROI, we got a 10x multiple on this. Great. But the reality is you're going to dig in and realize like, oh, we would have gotten a 20x if we had just focused on enterprise, or we would have gotten a 40x if we had done it in New York instead of LA because all the people came through New York, or, whatever. Like you can start to double click in, but even just understanding the grand scale allows you to say, I'm going to invest in that one again. I'm not going to invest in this one. And all of a sudden you're a smarter marketer because now your programs are going to be more efficient because you've done 2 that work instead of 1 that didn't work last time. And, it's not overnight. That's for sure.
So I'm curious, because you brought up the age old word common sense there. How do you strike a balance here? Because I do think there's an over index that can take place when you're trying to tie everything back to dollars and cents, certainly within marketing. And actually, I'm a pretty big advocate for brand, although I think when you are running initiatives along that line, you have to have a super tight connection to the business and how it's performing and some of those intangibles. How do you maintain a balance there between trying to prove, an ROI on every dollar versus also investing in some of the intangibles that are going to impact those more straight line campaigns, but certainly, have a longer runway?
Yeah, that's probably some of that common sense, which common sense doesn't always translate to getting the CFO to give you more money to say that. Sometimes that's the hard part. But I mean, I had a meeting this morning with my head of events, and she was asking for funds to set up for 2025. And so she was going through all the commitment stuff, and the dollars were so high because events cost a fortune these days. But I was looking at the dollars, and I was like, man, the dollars are so high. It was a big corporate event. And then the pipeline contribution was fairly low compared to other channels. I mean, decent, but fairly low compared to like when we run like paid search or anything, which is almost just like you can predict it, it's scalable, it's clickable, you understand that. But an event, it's a little bit. And so she was like, I know the we call it the multi-touch attribution ratio. I know the MT ratio is not as high as other things, but I still think it's important, blah, blah, blah. And she's trying to have this. And I was like, hey, listen, the reality is a big corporate event is as much about brand as it is about pipeline. So I don't expect the same return on a corporate event that I do on, on a paid search campaign or something that's pure conversion tactic. And so what we've had to do is we've had the RevOps team look at things by channel so that we know what is acceptable by channel. Like do some look at the past 10 events we ran. What kind of ROI were we generating that we say like, hey, we should get a 3x multiple on an event, but we should get a 20x on a webinar. And that's okay. And then we should know that that's the case. And so when we come in and say, hey, this event's actually performing well, we know that the reason it's getting 3x is because the other benefits are the intangibles that you're talking about, right? It's coming from a brand presence. It means like, do we want to invest in that bigger booth? Well, we might not get more scans because we have a bigger booth, but we're going to get more brand impressions. We're going to get a better, perception of our, of how much we're investing in AI, if we're going to an AI or whatever it is. And so I think it is a little bit of a balance. I try to do a 50-50 split between working and not working as much as I can. And if I'm putting 50% of the budget into working dollars, meaning that they are out in the market driving something, because marketing does have a heavy headcount lift. Like it does have there are arms and legs needed to run a marketing program. And so there is a balance of that. But if I can do that, it doesn't mean that that whole 50% is working for pipeline. Some of it's working for brand. Some of it's working for, customer delight and increasing our loyalty or, there's different objectives. But I think, again, back to those business athletes, that question at the beginning of what is the objective of this program? If they tell me, hey, we need to invest all this money because it's all pipe, then I'm like, this pipe is pretty weak. But if they say, hey, we want to invest this because we think it's both for brand building and for pipe, I think it's a good investment with the right audience, the right decision makers, the right C-levels, whatever it happens to be. And I'm like, okay, I can get my arms around this. Like this feels on strategy. So yeah, it goes back to that.
I would imagine there's speaking of brand, there's a personal branding component to this kind of business athlete concept to where, you mentioned going to a CFO or, a financial purse holder and asking for budget or probably these days more making a case for anti-budget contraction, that to where you built up that kind of personal brand within an organization as someone who understands the business, understands the economics, and, is not going to make that ask without understanding that there has to be an ROI attached to that and frankly makes good decisions. So do you see that there's that kind of carryover in terms of just trust within the business as well?
I think so. Yeah. I mean, I think the more you do that kind of stuff I think if you sort of ground decision-making in those right metrics at the beginning and build that trust, I think after that, it kind of extends you some latitude in how you can make future decisions for sure.
Yeah. I'm actually curious a lot of our audience is startups, founders, VCs, things like that, folks in the early stage stuff. So a lot of the things that you're talking about are a little bit out in the distance, right, for them. But marketing is one of those things that becomes a little bit of a black box for early stage founders, especially product or engineering led founders who don't understand it. It's not tangible. It is perceived as maybe the arts and crafts department, whatever it may be. And in our experience, marketing has become multidimensional, multifaceted, multi-skill set. So just for the audience's delight, talk about all the different skill sets that you manage as the CMO of Demandbase, which is a relatively large company. We're not talking public company here, but we're talking, good mid-market company. Yeah.
Well, first I will address the audience because I have now been a CMO at 2 different founder-led startups. I've also written 2 books. My next book will be called I'll Never, Ever, Ever Work for a Founder Again. So that's all I will advise for your listeners.
How many evers was that?
Yeah, I mean, as many as will fit on the front cover. And the main reason is because they may be product or engineering folks, but founders often, so my biggest advice in the founder department is founders have a hard time separating their brand from the company brand. And so it puts this untenable pair of handcuffs on a CMO working for a founder because you can't touch anything. You have to run everything at the flagpole. You are the number 2 marketer in the company when you work for a founder. And I think that's something that hopefully I don't think founders are aware of themselves doing that, but it's a really, it puts a CMO in a tough position.
That's a huge challenge.
Yeah. They joke that the average life of a CMO is 18 months. And I'm like, I guarantee you that average is brought significantly down by CMOs who work for startups, for founder companies, because it's like a year and you sort of just burn out and churn out. And that's where I think that high turnover comes from. But anyway, that was what you asked. I just wanted to throw that in there. The range we cover, I sort of think of marketing as the full range of brand to demand. So that involves, and I sort of think of our core objective every day. And I think the way that a founder should think of it as well, or a startup, is I believe that marketing's job should be to make sales love them. And that means that doesn't mean that I give them bottom of the funnel pipeline all day long. Yes, that's important, but it means that I give them a brand that they are proud to represent when they are outbounding. I give them air cover in the market that they will see ads that we are running. They will see us on social media, organic or paid, that they will see us, that we'll be representing at events, that there will be press about us, that there will be partnership announcements or product innovation announcements, but there will be air cover for them to go, that we give them a high quality pipeline that we are running through. And we do that through account-based marketing, making sure that we are going after the right key target accounts. I want to make sure that they have a product portfolio that is as robust as it is simple for them to understand and simple for them to communicate out to their customers. Very simple value props as much as we can. Double click into all the speeds and feeds, but really an easy way to deliver. I want to make sure that our pricing and packaging is as simple for them to quote and sell as possible. I want to make sure that the media we're running and the creative that we're running makes sense and is driving actions that are helpful to them, whether it's sign up for a meeting or it's come to this webinar or it's, come to an expert session with one of our ABM people, whatever it happens to be. I want sales to feel like, man, marketing gets what I need. And it's not just pipe, it's everything that makes my job easier to do. So that's what we focus on. So everything I just said, product marketing, pricing, analyst relations, content marketing, creative, demand gen, which includes field marketing and local events. It includes webinars. It includes partnership, partner programming, joint go-to-market stuff. It includes brand and organic social and press and influencer programs and sort of all the things that cover that full funnel that enables sales to do their sort of full funnel job effectively.
Be one of the best skill map breakdowns I've ever heard as it pertains to marketing. So great job, Kelly.
Thank you. I appreciate it.
So I think anytime we have a marketer on the show, especially someone at your level, I just have to ask for the sake of the audience, what are you seeing, obviously through the lens that we've been talking about here, but what are you seeing that's working in market today? Because so much has changed in the last, 12, 18 months. I think everyone's grappling to find things that work, probably different than than what was working before. So what are you guys seeing perform specifically for, again, a B2B SaaS organization out there?
Yeah, good question. Right now, it's a lot of I won't say trial and error, but it's definitely a tough market to be in. And so, every dollar of pipe is harder to get than it used to be. I think, I'm hoping things change post-election. I'm hoping things change 2025. But I think no matter what company, I was having lunch with somebody today and she was like, my son works in restaurant tech. They're struggling. I'm like, restaurant tech, who knew they were struggling? But she was like, literally across the board, every industry struggling. And so I think what we've seen work in the most recent years is that one, people are just much more stealth, right? I read an article, Forrester maybe, or Forbes, I can't remember which, sorry, source, but they, that said recently that the average B2B buyer is now, and I don't know how old you guys are, but is now younger than me, right? They are now a millennial. They were born after 1982 and that's who's making buying decisions. Well, that's not necessarily me. I'm not far from there, but I'm a few years older than that. And so, but those people buy different. They've lived in a completely digital world. They have not, I still remember the before and the after of the smartphone life or the internet life. They don't, They only know the after. And so there is this scenario okay, these are people who don't want to talk to humans. So how do I engage the most with them digitally before they have to actually meet with a salesperson on a phone or in a meeting? So they want to know more information before they engage. It means you have to ungate your content. It means you have to do product tours and demos on your website. It means that you have to have influencers who are not trying to sell them something, but are sort of peddling at least thought ideas that kind of go that direction. So I think there's a lot. So one, they're just doing a lot more of their own research before they ever speak to you. So what that means, what we see is you see engagement in digital content. You'll see them maybe come to a webinar. You'll see them download a piece of content. You'll see them even maybe sign up for a meeting and then ghost you. That's kind of where they disappear. Because I'm I don't really ready to talk to somebody yet. That's not too intimate and too personal. So instead, I'm just going to keep, and they'll stay engaged. They'll keep reading stuff. They'll keep opening emails. They'll keep doing that. But speak to a person, no thanks. So we're just having to realize, how do we influence as much as possible prior to or forcing into that phone call? I think that's why the explosion of PLG in the past few years, because it's people saying oh, I can engage, try this product, play with it before I ever have to speak to a human. So I think that's one, is trying to break through there. I think the other one is people are savvy and they're not necessarily wanting to be marketed to all the time. I think that's why the rise of influencer marketing. I had a call yesterday with I was hosting my podcast, and the guy said, I think we need about we need 10 what was he? He was a welder. He said, I think we need 10 welders for every 10 social influencers we have. We have so many influencers and not enough people with hard skills, which I thought was funny. But anyways, because we have a shortage in the trades world, which is another career path if marketing doesn't work out. But because of that, it means that you've got to be a little bit more savvy. And how do you kind of influence ideas without sort of dropping your product in their lap? How do you talk about, we talk a lot about sales and marketing alignment, because that's so important to the way that we operate, the way that we function. It happens to be that account-based marketing, which is what I do, helps solve that problem, which is really nice. But they don't want me to sell them ABM. They want me to talk about the pain that they're struggling with, which is around sales and marketing alignment. So, I think those are some. And then what we're seeing working is really, and not a shameless plug, is account-based marketing. We've seen a massive ROI lift. We run straight demand gen, and then we run ABM on top of it. Obviously, we run Demandbase on Demandbase. And we have seen, Forrester just came out with a study that said that ABM has a 99% higher ROI than straight demand gen. And it's because, the old stat, only 5% of your target market is in the market for your product at any one time. So how do you find that 5%? Well, you have to know who's engaging with your stuff. You have to know who is actually raising a hand. And ABM allows you to see the signals on your website, the searches that they're running, the content that they're consuming. And then you're kind of oh, I can start to build, this person is obviously in the market for this thing. It's about I'm going to spend money on that person versus spending for the universe and hoping that one person happens to spike.
Right.
So those are the things that we're seeing. I think that
Does that stealth mode buyer who's taking a considerable amount of time consuming information. How does that translate into the sales cycle? Are they a better buyer, more sophisticated?
Yes, in some ways, for sure. They definitely show up with the right questions to ask and the right things they know that they need. So I think that part is helpful. It means shorter sales cycles typically because they sort of come in ready to buy, or they come in and say, hey, I've done all the research. It's between you and this one other competitor, and we're down to this. And so we want to run an RFP with you. Usually what that sales cycle is it means we probably have a champion, like we have somebody, they're usually the practitioner who's doing all this research. And so they are going to champion in their organization. And so then the pressure becomes on us to not convince them, but to convince their CFO, to convince their CMO, to convince their CSO that this is a viable investment, and making sure that all of those influencers, in sort of that multi-threaded approach, are bought in. And I think then that pressure comes a little different, that we need to sort of target our influence by persona. We need to address different pain points than what the practitioner has. So yeah, it's a little different. I mean, B2B software sales are complex, right? They're not one to
They are.
well. It'd be so nice if they could just sign up and buy it. And sometimes they do if it's like a bots account. But if you're talking about and something that you want to represent the new sort of platform of record for your go-to-market strategy, the way Demandbase can, then it's a long, complex sale.
Well, it's a great kind of full circle back to the, business athlete concept, because we see the same thing. We see a ton of, sell through requirement where you're selling through that champion to someone who may or may not ever hop on a meeting with you, but is certainly looking at, the value prop, the ROI model, the black and white of business value there. So I can see how that, not only benefits in one area, but multiple areas of a business, certainly as a marketer and a seller to other organizations.
Yeah. Well, yeah. And it also isn't just about those steps up front, not only help you close the deal the first time, but they help you with retention and expansion as you go, right? Like getting champions on board early means that there's appetite to expand. There's appetite to do more. There's also pressure to show ROI sooner, but I think but you kind of end up with a quicker renewal cycle, which is always nice too.
Yeah. 100%. I mean, getting back to the business athlete concept and thinking about ABM as a category, right? It's a bit more mature now. A lot of people know what it is. There are major players, yourself, and a small couple of others.
Yeah. And
if most cycles are getting into a competitive scenario, as a software vendor, you never want to just be pinned against each other on a feature, function, pricing, sales cycle. How much role are you playing from a marketing standpoint in designing that ROI model that helps you sell on value versus just selling on feature, function, and widgets?
Yeah, I mean, that's a real question, right? That's part of the thing, like Justin was talking about, like with brand and things. I mean, that's part of a brand investment, hopefully, is that people sort of have an affinity for your brand and you kind of make those concessions on feature function trade-offs. So that's one. I think the other thing is that the most fun thing about my job, and maybe else too, I don't know, is that I'm a marketer marketing to marketers. And so one benefit of that is I can write messaging that is relevant to me.
Yeah, speaking of language.
Yeah. And so we because we run Demandbase, also we're essentially customer zero. And so to be able to think would I buy that? Would I not? I'll see this stuff come through. For example, we have an advertising network, our own proprietary B2B advertising network, which in the industry is called a DSP. I'm when I see ad copy that comes through and says we have the best DSP, I'm no one talks like that.
What is that?
Yeah, no CMO talks like that. Maybe an agency does who works in ad tech and is in the back ends, maybe, but that's not our target audience. I don't talk like that. I'm not going to read like that. If I read that, I'd be oh, just tech crap, and I'd just disregard it. But really what it is that's the technical name. I'm now speak to me as a marketer. What do I want to, speak marketing to me instead of speak tech to me. And so I think that sort of forces you to make sure, like you said, that value selling. I think the other piece too is for software, and what's so important is, like I said, especially for complex, is it's not a deploy and it's not a drop the bomb and then get out. So it's not you just buy ABM and then we get to leave. Yeah. There's a value journey that they need to go through to make sure that they're onboarded properly, that they are set up correctly, we are integrated with the rest of their tech stack, that they are leveraging all the capabilities, that they have tips and tricks and tutorials on how to get certified on all the different capabilities, that they can see immediately the benefits. Because like that first, 60, 90, 120 days is so important. Because you want them to recognize value, because otherwise it becomes shelfware and then renewal is a lost cause. And so, we want to, figure out what that whole, not only value selling, but that full value journey looks like.
Absolutely love it. Well, I know you've dropped a few hints here and there, but tell us a little bit about Demandbase and the work you're doing there. You've kind of woven throughout, but pitch time.
Yeah. I mean, Demandbase is account-based go-to-market company. We are, it's officially, I guess, in the ABM category. I love the phrase ABM because I know exactly what it means, but I think it was poorly labeled because it implies that it's just marketing. But the reality is, like, the only time account-based is really successful is if marketing and sales are both adopting it, because that's what it does. It drives alignment to make sure you're all looking at the same accounts, you're all seeing every touch point, you're all like, it's a handshake versus a handoff. We end up kind of working together on touching the same customer and the same different buyers or influencers at every account. And so it's a whole sort of go-to-market approach to saying, hey, we're not just going to spam the universe. We're going to find the right accounts, the right message at the right time, and we're going to be really targeted in the way that we execute. And we're going to build some of that based on engagement, propensity to buy models, different kind of dashboards we have on kind of watching the activity in the market. So that's what we do. The main things we're focused on right now are, to be honest, we've been around for a little bit. We created this category. We created the ABM category years ago. And we've had a couple and there's always kind of that second mover advantage because you have a different perspective and you're kind of reacting to instead of creating. And so I will say that we kind of spread ourselves too thin trying to cover both who we were and where the competitors were coming, instead of saying, hey, let's just play our game. Let's focus where we need to focus. So right now it's about really focusing, making sure we have high brand awareness, but making sure we have positive brand perception to go with the high brand awareness, which is a different challenge. So we're really working on that, and then trying to make sure that we execute and deliver in a way that embraces a kind of customer first mentality. So those are the big focus areas for us.
Love it. And we can find you at demandbase.com. Is that correct?
Demandbase.com. That's a good one.
All right. And if folks want to find you, the best place?
Probably LinkedIn. That's a good one.
LinkedIn.
And, I encourage anybody to reach out, say hi. I'd love to hear from them.
All right. So demandbase.com, Kelly hopping on LinkedIn. Kelly, I love the business athlete cheat. I mean, honestly, it's phenomenal. And anytime you can tie things like marketing into the business KPIs and objectives is just going to be a win for everybody. So appreciate that.
Sure.
For those of you listening, if you could please subscribe, and maybe even write us a review, that would be fantastic. That would help us in our distribution and spread the net and cast a little bit wider. What's it called? Distribution, Kelly? Is that what the marketers call it?
Sure. That works.
Sounds great. So help us spread the word for the podcast. And also a reminder that the Go-to-Market Cheat Code book will be coming out in January of 25. Our pre-order site is now up and ready. So go to Amazon, search Go-to-Market Cheat Code. Hopefully we come up. I think the SEO is pretty decent on it. And you can pre-order the book there. That would be fantastic. Kelly, thank you again for joining the show. It was a real pleasure having you.
Of course. I enjoyed every second of it. Thanks for having me.
Yeah, thank you so much.
That's another episode of the Go-to-Market Cheat Code. Thanks for listening.